Again from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at what happened in the market during the last week, right? And then how we can plan for it next, a better trade for the next week, basically, right? So July 25th, Monday, 2022, that's the week beginning starting from tomorrow. Let's get in the charts and see what exactly happened, right? So this is the weekly candle that you see of the Banknifty on the left side and Banknifty on the right side. You can see that it's a series of gap ups that's clearly visible. 1, 2, 3, 4, 5, right? So starting from Monday, it's a 6% up move, right? It's clear gap up moves, like it's clear bullish moves. What do you see in the Nifty? And look at Bank Nifty, similar pattern, right? Gap ups and moving up, and the candle size, the width of the candle, it's wide range bullish candle is what it's all about, right? That's a weekly. You're seeing the weekly. So I'm sorry, this is a daily that we have shown, showing the weekly first. Look at the weekly candles. Wide range bullish, right? On Nifty and the Bank Nifty. So there's no doubt about the bullishness that you see here, right? That single candle, it's big moves and big bullishness is what you see, right? So let's get to the numbers and see what is it. 4.2% it moved. It's nearly 700 points, 672 points of up moves. What exactly happened with the wide range bullish move in the Nifty with multiple gap ups, and it closed about weekly 20 moving average, right? That's clear bullish. And Bank Nifty, it's 6%. That's 2,065 points in the Bank Nifty's up move that happened, and it's closed with a wide range bullish candle that we have seen. So this is the kind of candle that we have. It's also an open is low. It's another bullish pattern if you're not aware of that, right? So it's clear bullish. The candle itself does not have a wick on the downside and only a wick on the upside, and this is a open is low price pattern, which by itself is a strategy, right? In addition, look at the size of the book. So now that it has made a big move, there might be little consolidation that could happen on both before it takes the next move on the bullish side, right? So the daily candles, this is what it shows. So you can also see that there is clear supports at this place. Down here, when the gap up happens, it's a clear gap support. Here also clear gap support, right? So Bank Nifty has got two gap support, one here and one here, and Bank Nifty has got only one gap support, right? Similarly, there are resistance that's going to be there on the upside. We'll look into that when you look at the support and resistance levels, right? So daily candles, if you see, what do you see there? It's about 20 and the 50 moving average, right? That's what you see. That's a so 200 moving average also is cleared on the case of Bank Nifty. The case of Nifty, 200 moving average is resistance on the upside immediately, and it was like it's a 1.5% move that you see here, and it's nearly 0.7% of move that you see on the Bank Nifty, right? On the daily time frames on Friday, the last trading day. That's what we're talking about, right? So, but the only thing that we have to make a note is that, right? If you look at the weekly, you can see that there is a trend line channel there here, down sliding trend line channel, very clearly visible. It's not drawn here. In the next slides, it will be it's shown as how it's drawn. So look at this trend line channels. So it is on the top of a trend line channel. That itself by itself is a channel breakout potential or a channel reversal potential. Anything would happen. So it's crucial resistance, and that culminates. That goes along with the 200 EMA. There's a confluence. That's what they say in technical analysis, right? There is a confluence of 200 EMA and the top of a channel, and gap and gap on the resistance side, and also there is a previous swing high, that could potentially break if at all it happens. So multiple resistances, serious valid resistances can clearly be visible here, right? So that is something you have to keep a note on. At the same time, being having a bullish view on the market. Charts are clearly saying it's bullish move, but is there a chance that it can have a reversal? Yes, potentially there is a probability that it can happen. You can never rule out that until the swing lows are taken out, until the price action shows a positiveness. You just have to be cautious. That's all. Now Bollinger Bands, look at this expansion on the upside, walking on the band. That's what technical analysis talk about Bollinger Bands. Where the price moves on top of the chart. So look at this in the Bank Nifty also, right side. The price moves is walking on the bands on the upper side. Clear bullishness is what Bollinger Bands on the daily time frame indicating. So we have studied the price patterns, right? So we have seen that weekly is having a strategy by itself. It's having a candle pattern, open is low pattern is there, clear bullish wide range candle is there. Daily you have multiple gap ups with very good supports at each gap up that happened, and the same is more or less reflecting in both. But at the same time, we also see that there is serious resistance for the Nifty at 200 EMA, then gap resistance is upside, and then you have the previous swing high which has to be breached. That is also there, right? Bank Nifty 200 EMA is cleared, swing high, one of the swing high is cleared, but you have other swing highs and previous resistance. Gap resistance also is there on the upside. So, right. So that's a wrap up of what is the price action that happened. Let's move on to the support and resistance levels and see what the levels are talking about, right? See the gap that we're talking about. This gap is now a support zone. But before that, we have another support is 16,550 to 1650. That bridge, then you come to 16,350, 16,500. It's a Fibonacci 50 retracement level. That's on the Nifty. If that is also there, you have another gap at 1650 and 16,200. That zone. Right? If that's breached, then you come back to the 15,950, 16,000. That rounding number, that zone. 15,850 to 15,950, the Fibonacci 16 retracement levels. These are all great super supports. You can see the swing lows that is happening and then trending up. Swing high, swing low, swing high, swing low. So this is clear trending up move. No, and the up move is nearly 10% on Nifty and 14% on Bank Nifty, right? And so the final greatest support that we have is at 15,500 to 15,650, and then you have the previous swing low that was created before this up move rally happened. That is at 15,200. To 15,350, that zone, right? So these are all the supports and downsides. Simply the upside, what do you have? We are at resistance at 16,700 to 750 zone. Then you have a clear, very good resistance at 16,800 and 900. We know why it is, because it's a previous swing high breaching zone. And then you have 17,050, 17,200, 17,350. Both are previous resistance. Then above that, you have another gap resistance, which is very serious. That is 17,408. So 17,300 and 17,400 is the clear zone above which, if any close happens green, that means we are back into the bullish rally. The bullishness is going to continue because we have breached multiple very strong resistance on the upside. That's Nifty. Bank Nifty, what does it say? You know that there is a gap support that we have. Before that, we have another gap on another support, ordinary previous resistance support that is at 36,300, 36,800, and if that's breached, we have the gap support that's at 35,600 to 35,900. That zone that is support. It's a combination of the gap as well as the previous support zones, right? Then you have 35,000, which is a very good support. If that is breached, you have another gap. Two gap supports are there. That's at 34,350, 34,750. That's also breached. Then you have 33,600, 34,350, 960 retracement levels. And then you have 33,000, which is a very good support. These are all supports. These are all swing lows that was created when it was moving up, rallying from the downswing low support zone at 32,400 to 32,800. And then below that, if that is also breached, near to 32,000, 31,800 to 32,150, that's one also we have support. So make a note of all these levels which are going to be very useful when you're taking the trade positions, right? So upside and downside of the Bank Nifty is also very clear. If you're not very clear, just go back to your own charts, play back the video and then compare, and then you'll understand why that is a support zone, right? Most of the support zones are drawn because of gap or previous resistance zone where the price halted and reversed, or it could be resistance or support zones, or it could be Fibonacci retracement levels. So it's a combination of all these is what this zones. It's not a precise one point, it's a zone. Between that range, there is a likelihood that there is a selling pressure or a buying pressure that would happen. Is what support and resistance is all about, right? Let's move on and see what happened to the momentum and the trend, right? After the price pattern, we're moving on to momentum. So momentum has turned clear bullishness. Look at this. Look at this. It's a price on the above. This is the RSI that's in there. It's the weekly time frame. It is clearly up, moving on the medium term. Bank Nifty also clear moving up on the medium term. So in the shorter term, that's the daily time charts, momentum is not shown here, but it is clear above 60. That's clear rising momentum. It's clear bullishness on Nifty as well as Bank Nifty, and the momentum is continuing to rising up, continue to move up. That means clear bullishness on the short term. But the medium term, it is still sideways, but it is rising and heading towards the bullish zones, right? So that's what the momentum is all about, right? Now, next one is trend. Right? Trend analysis, we are using ADX. So it is, you can see that it's weekly to ADX. Weekly ADX is just crossed over to the bullish zones, right? Here also it's crossed over to the bullish zones. So, but the trend strength is not that great. It is just dipping. So we have a lesser strength because the crossover to the bullish zones has just happened. That means on a medium time frame also, the trend has changed to the bullishness. On the short term, definitely the trend has changed, and the charts are not shown here to remember that. But on the shorter term, the trend indicator is in the DMI positive zones, and the strength of the trend, which is indicated by this green, is moving up on the daily candles. On the weekly, it is moving down, but it will turn, make a turn here slowly, because the crossover to the bullish zones or the DMI bullish zones has just happened on the ADX on the medium time frames also. So that is interesting. So trend and momentum clearly bullish, at least in the short term for sure. Moving on to volatility and opportunities analysis. First, let's see volatility. Look at this chart. So it's the India VIX charts that you're seeing there. You can see that there is a clear cool off of the VIX of another 5.5%. Look at where we have come from. We have come from the 23 kind of levels. Before that, we had touched the 28, 30 kind of levels, and then now it's big VIX cool off. That means the uncertainties in the market is slowly, even though it is still there, you have to be cautious that it's definitely there, because we don't know how long the war will continue. We don't know what interest rate hikes would coming in, how long it will come in. We don't know the inflation rates, how it could get controlled. So market is not discounting all of those. So the VIX has not fallen back to the 10 or 15 or that levels. It is still near to 17, below 16. But it is a big cool off considering the 23. Considering the amount of uncertainty that has happened during the last several months, compared to that, it is really cool off. So it gives a lot of ease in trading if you're doing it in derivatives and options and all that, especially. And right, your portfolios may slowly be showing green eventually after some more period of up move if it sustains, because uncertainties have reduced but definitely not gone off. Right, that's something I will talk about. Even volatility can be analyzed with the help of India VIX, as well as the Bollinger Bands we have seen earlier is also giving some indications. In the short term, it clearly says that volatility is expanding. Right, so the Bollinger Bands are expanding means in effect it is the standard deviations that is expanding. Right, so that means that means the price is walking on the bands, and it is volatility expansion is what is happening. Right, in India VIX terms, we tell that look, there's a big cool off of that's happening. Right, so moving on to the analysis on the another analysis is the open interest analysis, which is used for basically finding support resistance levels. Then you may ask that the support resistance have already been analyzed based on Fibonacci or previous resistances or gaps, and we already done that. But now this is another way of doing it. When it comes to future derivatives market, futures and options, right? So a correlation or if similar ranges or levels are coming up in the OI and the support resistances that we have studied from the charts, if they are matching, then definitely you have another confluence, another reconfirmation. So the more number of confirmation that we have on a level, the more stronger it will be. More should be our conviction on that, and more confidently we can trade. That's how it is. So this is open interest analysis based on futures that is showing short covering. Short covering is very powerful. It can give big moves. That's what in Nifty. Banknifty, it's a long build up that has happened clearly. So it's clear bullishness that is the open interest analysis showing. And remember, the monthly expiry is what now we have. The next one, 28th of July is a monthly expiry. That's going to be high volatility that can happen. It's very difficult to predict the levels. We're very close. We hardly 4 days left for the monthly expiry. Volatility would be there. Predictions may go wrong because of the gamma big moves that happens, right? So so be careful and cautious about that. So put call ratio is another factor that we always know, with the number of puts and the calls that is written. We should know which one is dominating. So that gives an idea on how much of bullishness or bearishness is there. Now the put call ratio is 1.35, which is very bullish on the Nifty. 1.19 was also clear bullishness on the Bank Nifty. That's another parameter that is telling us, yes, we are on the bull run. No, at least in the very short term, right? So put call ratio in favor, open interest futures in favor, open interest options in favor, India VIX call off in favor, price patterns bullish, volatility rising, momentum rising, trend rising. Everything is clearly indicating there is bullishness for sure. No doubt about that. Right? This is what we're talking about, right? The number of puts are indicated by the red, and number of calls are indicated by the green. So what you see here is a change in open interest. What open interest got added up in the last Friday, right? And where it has ended up is what it's all about. Left side Nifty and right side Bank Nifty. You can clearly see that the dominating highest number of puts are more than the higher number of calls. That also shows both indices are bullish for sure. Alright, so look at the level 6. So remember, this is July 28th monthly expiry, and level 16,500 and 16,000 is where the highest put ratings are seen, the highest first and the second highest. Similarly, the resistance would be seen at 17,000 and 16,800, right, where the highest number of calls are written. Put ratio is 1.35 already seen. So that's what Nifty, Bank Nifty, 36,000 and 37,000 is the range. where the highest puts and highest calls are there. That's what the support and resistance will be there. The next support would be at 35,000 on the put side and 37,500 on the call side, where the resistance can be seen. So 2 levels. Second is what we talked about last. So long build up, short covering futures, OIA and PCR, we already seen that it is bullish. So those are the levels. Try to see if this is correlating with the levels where you're trying to make a swing trade or the intraday trade, whatever it is, right? These levels need to be marked clearly, and then it helps a lot. Now moving on, we would have a look at this, how the industrial sectors performed last week, right? So IT is showing a very good indication of reversal potential. We're still in the various zones on the medium term, but on the side, but on the short term, it has moved sideways, and the move that has happened last week was big, right? 6.25%, and the Nasdaq and the US indices moved up. The markets also seems to have recovered and then closed with a very wide range bullish candle. 6.2% of up moves what happened in the IT, but definitely just some. If you're an investor, this may be time to buy, but if you're a trader, this may not be the time because the momentum is still in the bearish zones in the medium term and still in sideways. Not at anywhere close or rising towards the bullish zones yet, right? So that's what IT sector is saying. Metal also made a big move, 5.25% of up move. Momentum is still sideways, but both medium term and short term is sideways. So just try to be patient for some more time for the short term to get in bullish zones at least before we take trades. But as of now, wait and watch, right? But a clear recovery is seen from the bearishness to the sideways, at least on the metal sector, which was beaten up a lot during the last month or before that. Auto sector is a star, right? It's another 2.2% that we see green up more, and then short momentum is bullish and medium term also bullish. So definitely you can take positions in this sector. From the previous week itself, you could have taken, but now it is clear indications. So bit tight stop losses, of course, because uncertainty is there as a doctor. Pharma sector, 1% down. The only sector that has fallen down last week is pharma sector for some reason, and the short term momentum is sideways, and both are sideways. Medium term also the momentum is sideways. So there is some underperformance in the pharma side, only sector. We have to be cautious on that. FMCG, another sector, just like the auto sector, is moved up, bullish, wide range bullishness, and clear bullishness on both the time frames and flower and higher time frames, both. Right, weekly also it's bullish. So we can definitely take some portion. Last week also it was the same, I believe. Reality sector is also bullish now, bullish on both time frames, definitely. Right? It's another third sector which is clearly bullish. So 4.2% of more happened. So reality, FMCG, auto bullish. IT and metal showing recovery. Pharma is not performing yet. Right, that's the sectoral performance in the last week on the indexes. Right, so these are the charts that we're talking about. IT, right, reversal. There is a bullish divergence that we've seen on the weekly charts, and then clear wide range bullish reversal can be seen. And metal also, right? 4 to 5 weeks of reversal is happening, but there is resistance in the upside. And auto, you seem to be breaking out, and the FMCG also here in the top right, you can see that it's breaking out after a rounding pattern, clear bullishness. And pharma sector is underperforming. It is on a downtrending trendline channel, right? Clear bearishness is there with the wide range bearish candle that we can see there. Reality is also breaking, bouncing on the support and reversing. Remember, it's a cup and handle pattern which had formed the handle pattern, and then now it seems to have taken a support at the previous support zone, and then now clear 3-4 weeks of up move is what you see. And after a hammer, that the 5th week of up move is what you see from the hammer on a weekly basis. So that's clearly bullish for 3 sectors. That is clearly visible from the charts as well. Index heavyweights, HDFC Bank, right? It's weekly charts that you see here. Clear bounce up from the support zones, and look at the candle size. It's clear wide range bullish moves that you see, and HDFC seems to be having some problems on going down as well as going up also at this zone, right? Because the major support zone from where an earlier breakout and an earlier support. So this zone is very important that you don't fall below 13,000 levels. So 13,000 levels below is bearish, and as long as we hold on this level, we can say that it's in the sideways. But last week's move is clear bounce up, right? So we'll have to see whether it will be able to move further up on a weekly basis from here on. Similarly, HDFC also is clearly showing a wide range bullish candle, breaking out of the downtrending trendline channel. But remember, there is resistance in the upside. So HDFC is catching up, is what we can say. But it's at a very good support, while HDFC, HDFC Bank is at a support, HDFC is having a resistance immediately above. But look at Reliance, right? It had corrected big and then taken a support at the cup and handle neckline zone from where it had earlier attempted 2 times breakout, and now it is reversing with a clear bullishness that is seen with a wide range candle on the last week performance, right? So Reliance is not giving up, it is holding on the support and then probably making another attempt to move up on the medium term. That's what it indicates. That's a heavyweight. IT sector performed. You can see wide range bullish on the TCS from the previous support zone, and we'll have to keep a close watch if it is stay about. Is it able to take out the previous resistance zone at 3,400, that range. Similarly, Infi also is showing a wide range, opportunity low pattern. Right. So this is a bank. Is the next one from the non-IT, the bank sector. This is clear bullishness that you can see. It's a support zone breakout, wide range bullish candle. Kodak was also showing a reversal from the support zone. Last 3 weeks it's up, bouncing up, but remember it has been zigzagging and moving up and down since a very long time. So most likely it may move up till this to 2030 kind of levels, and then probably may have a downtrend, and you don't know how long it will take for it to break out ultimately, right? It may take years, weeks, months, you never know, right? But that's what happening. Zigzag consolidation at the medium term is what is happening in Kodak Bank. While, and we cannot say that it's not bullish, it's clearly a reversal that has happened from the support zone. But IGSC is the guy who is broken out really, and now it is at a clear resistance that's shown at the 800 levels above onwards. You have clear resistance. So what you have to closely watch is it able to take out this all-time high at 836 kind of levels, where a major resistance is going to come. If that is taken out, then definitely it's going to be a big bull run that may happen. Remember, it had attempted and then faced resistance multiple times at this level and then fallen down to the ascending pattern breakout zone, and now again another attempt is made. We'll have to keep a closer. It may be a rounding pattern also on the weekly. So there is every chance of very good up move that can happen from here if this breaks out. Right? But tight stop losses, we know where it has to be taken at the neckline where it took the previous support. This swing trade as a positional trade, both ways it can work. So banks overall was bullish last week. Clear IT is showing taken support and then trying to reverse up, and we'll have to keep close watch if that happens. There's a tight dependence of the IT sector to the US market. So we'll have to watch both of them. But enough of correction has happened definitely on the medium term. 20 to 30% more than that, even more than that correction has happened in our Indian, all of the IT stocks. So it may be a good time to buy also. Okay. Institutional participation is the next section that we are going to see, and look at this. Right, this is the first time as we are seeing a clear buy week for the first time. 4,000 crores of buying has happened from the Fyers in the first week after probably several months of continuous selling. Fyers has been selling since almost a year. This is the first week that I'm seeing that Fyers are clearly buying and heading and buying more than DI, because it's only 940 crores of buying that has happened from the domestic institution last week. And then derivative side also, we can see that both of the FIDI institutional participation has moved up. It's on the long side. So this is very good news. Probably we can assume that for a short term at least, the selling is short from the institutions, and FIs are going to buy. That means the market will definitely move. But keep in mind that this is the earnings season, and a lot of stocks might have performed which are heavyweights, and then so there may be some buying that may be happening from because of that. And retail participation also would be it's likely to be more if things go on the right way on the results. So we'll have to see from the coming weeks if this is going to sustain this up more. This buying from the institution is going to support, going to sustain and continue or not, is what the up move from here on would depend on. Right? Yeah. So next we would have to look at the global markets. So last week there is definitely reason that we did not go bearish, right? So US markets are up 2 to 3%. Dow Jones, Nasdaq, S&P 500, and all of this 2 to 3% of up move has happened. US market after attempt to bounce up from the support zone. So we'll have to see the charts, right? It's a 35% kind of level. 20 to 30% of correction has happened. Look at this Dow Jones. What you see here, Nasdaq is what is here on the top, and down you have S&P 500, right? Now you can see that the reversal candle is what you see for the last 3 to 4 weeks, and after a big dip to a support zone at 29631 has happened, right? So it's a reversal attempt, so we'll have to keep a close watch. If no, it seems to be fine. It's making higher highs and closing above the previous highs and all that is happening, but making new highs at least it's doing that. But we'll have to see the next week's candle and see whether it's going to hit this or then reverse or break out from here, and then so all this has to be. So it's in the channel on the medium term, on the weekly charts. It's a channel bottom. A bounce up has happened. Whether the bounce up can go to the channel top if things goes well. Otherwise, it can take another swing high and then form another swing low and break the channel. So all this can happen. So you can see that Nasdaq also is at a resistance zone. Now we'll have to see whether this immediate resistance that you see at 12,400 kind of levels, would that be taken out? We'll be able to close next week above that, is what you'll see. S&P 500 also at a previous resistance. Remember, all of this had fallen on from a major support zone where it was trying to hold on for a long time, right? So that breakdown has happened 2 months back itself, and then a revival up move reversal attempt is what you see in the global markets on the US indices especially, which so we know that there is impact now markets also, if that whichever big moves happens there, it would impact down. So crude oil is another good news that we have in the markets. Maybe another reason why the market is moving up is crude oil. It has cooled off from the 13-year high levels, 121 plus levels. It has cooled off to below 194.5 levels, which is good, right? So gold has also crashed. So it is as expected, it is taking a support at 1678, famous support zone from where it had attempted multiple times more, right? So it has taken a support and bounced. The green candle formed last week, but remember we had a big crash from the 2074 kind of all-time high levels, which it was about to close, about to touch, inches away, and then crashed. So gold is slow moving with the medium term also. It's very slow momentum, so it may be consolidating within this 2074 to 1678 11, and it cannot crash below that. So this kind of zigzag move is what can be expected for some more period of time on the gold. But yeah, gold is mainly used as a hedging instrument to protect our stocks, equities, and quality investments, right? Primarily. So this is the way the gold behaves. It does not break out or go trending most of the time. It may take years before it makes one trending move, right? Now that's a wrap up. So US market's green. It is attempting to reverse. We'll have to keep a close watch on that. Dollar, yeah, we're not seeing the dollar. So that is another story. Dollar also has shown a reversal, right? Last week we had the dollar index, which has fallen 1.4% down, 106.5 for where it is. So dollar index has fallen, but it is not directly correlated with the Indian rupee. Right? We use the INR, there is no direct correlation, but you can see that it's closed above and hit all-time high levels, and there is some kind of selling pressure or some intervention with RBI or something is happening. Because of that, it has formed a wider wick on the top side, and then it has closed at closed flat at 79.8, right? So that's crude oil. Similarly, you can see that it's an indecisive doji pattern is what you see on the crude oil. Look at this candle. It's having a long wick and then very small body. So there is indecisiveness in the market whether it has to break out this 90 levels, 93, 94 levels, and go and take it support as 84 or 61. All this, it's indecisive what next to do, or should it come back to the channel top once again. So that is what is clearly evident. We'll have to keep a close watch. So when this body is very small and then gravestone doji kind of patterns, then there is a lot of shelling pressure and a lot of indecisiveness in the market. So anything can happen. That's what it indicates. So gold, I said, but no, we have seen that it's 1.2% of bounce up from the support zone has happened. Crude flat, dollar flat. Dollar fell down, but USD and the currency pair is flat. US markets moved up. It's overall it's positive because dollar has cooled off. US markets have moved up. Crude oil has cooled off, right? And USD also is staying flat, not moving further, breaking out to 81, 82 kind of levels. That's not happening. So overall, it's global markets and Qs are positive, I would say, for the last week. Was positive last week. So we have to look forward what would happen for the next week. Would it continue? Would it sustain? All these are the questions. Two actionable stock picks. ICICI Bank, clearly bullishness, wide range bullish candles. We already seen the charts of ICICI Bank. Look at the support zone, look at this candle size, wide range, big moves, and it has hit the 800, and we have 810.05, which is a clear resistance, and above that you have 836.2, which is the next resistance, and above that you have an all-time high. So would it break this resistance or not? Because it's a first attempt, second attempt, and third attempt. It's a major resistance. We have to keep a close watch. There could be selling pressure that can come at this zone, and be cautious when you're bullish, and only if the price shows clear bullishness of a close above this candle high, previous candle high is what you, and it may be positional trades and may work out more here, right? RiskReward 680 would be the zone where you have to put the stops, right? Similarly, on the long side, Eicher Motors running a routing pattern breakout, clear bullishness, right? Momentum is also bullish, so auto sector anyhow, medium term and short term both are it's bullish. So that's another pick. Eicher Motors and ICICI Bank, two picks on the long side for the next week. Swing trades with great momentum, bullishness, trend, everything. Now Nifty payoff charts is what you see, right? You have a double diagonal calendar spread once again. The reason that I've always been explaining every week, the reason for this is that it gives very good probability of profit. At the same time, it gives a very good range, and even though the risk reward may be slightly less at the payoff chart wise, but if you target for a 1 or 2% of exit or a target point, then you can clearly make enough profit consistently. That's the key benefit of this strategy. It works. It gives a better range when the volatility is high. We don't know how the market can move. You know that 17,050 or 17,100 would definitely not be broken. That much a move cannot happen, right, for the next week. Downside also 16,340 from where it is right now. It's less possible, right? Given that supports that we have, we already studied the charts and the option levels, YI levels and all we have seen. So given that, there is less probability that this kind of big range gets broken. So even if it moves, we can always adjust. We have the time to adjust. We have the benefit of the volatility if a spike up happens, right? We would have our August 4th buys, which would be benefiting and keeping us from making big losses. Our risk is defined. It's 100% risk defined, and you know exactly what you will lose and what you will gain. And about the margin requirements that is there for this, right, is definitely very low. And the number of lots depends on how much is the capital size that you have. Just to wrap up, 10 to 14% of bounce has happened in the previous weeks. Now from the downside, we already seen the charts earlier, right? And every time it has done a trending up move. You can see that the retracement has happened and then an upswing, losing, upswing, up. So that's clear trending up move on the daily charts and weekly charts is evident, right? So that's very good. 14% of recovery. All the downfall that has happened is regained back. Now it is at a point where it has got multiple. Before getting into the negatives, the positive is that India is cooled off. Brokerage is bullish. Open interest OA on the options is bullish. Short covering rallies build up is what you see in the futures OA. Fyers are turned to buying. Bollinger Bands are expanding clearly and it's above the median. All are indicating bullishness, but at the same time, you have to be cautious that there is a 200 EMA that has to be cracked. It's very, very difficult resistance most of the time, right? There could be a gap again. You can coolly take it out, just like Banknifty did that 200 EMA last Friday. But for Nifty, may not be that easy. You never know. And there is a gap resistance at both. You will see the levels that they're down here, but there is a previous swing high. Previous swing high is very important with the price action. Previous swing highs are broken means the trend may be attempting to change and then moving up. It may fail also. So previous swing high, trend line channel top, right? You normally don't take when the trend line is not breached yet. So this is the zone where we are. We are at the trend line channel top on the weekly. There are previous swing high, 200 EMA. All of these resistance are there, right? So be cautious. Definitely we are bullish, but you have to be cautious. So there is a mild bullishness or a cautious bullishness. What my market view for the next week is, right? The US markets. So rest of the things is almost the same that I repeat for the last several weeks now, because nothing has changed. US charts have bounced up slightly. Oh, this is not updated, so it's not an indice dragonfly. This is a mistake. Sorry for that. But US markets have clearly made an up move. But the global recession, RBI repo rate, US inflation, federal interest rate here, all these we talked about, Russia-Ukraine war, all these are bearish moves, and it can turn out to be big overnight reversals or big high up moves can happen. Well, the positive factor is that market has shown enough strength. Look at you have few weeks where you corrected 15%, and then another few weeks you are completely recovered and you're back Nothing has changed in the industry or the business or the market. Nothing has changed. You have the inflation at the high level, you have the Fed interest, you have the RBI repo rate, you have global recession fear, you have the war, everything is there. So still we have recovered. That means there are retail confidence that is there in the market. Mutual fund money is going. Foreign institutions also coming back. So that is strength and the positive factor that we have. But remember, VIX is at near to 70 still. It's not fallen to 10. So there is every chance that you can spike back to 23 or at least a 20. It's very much possible. 4% of up is not a big thing in a week. So you have to be still very cautious. The levels. If there is a move that is happening at 16,800 above on the Nifty and 36,100 above on Banknifty, then we have one milestone is cleared, right? Because it's a resistance zone. 17,450s, 37,400 on Banknifty. If these two levels are cleared, then we can clearly say we are in for another rally, right? But how long it may take, months, probably a year, you never know. Right, so protect your capital is all that you can do. Risk manage, right? And hedge your positions always when you're taking overnight risk. And if you're an investment and you're seeing big red in your quality stock investments, use strategies like cash record puts you buy in more at SIP mode, or use strategies where you get regular income with the covered calls and etc. Right? But never take overnight risk. Have the risk defined so that your capital is protected and still there. You're still in the game. Otherwise, you're out of the game, and you would never come back. Right? If you have capital, you can always come back anytime. So protect your capital, manage your risk, and therefore hedge your position. So my view is mild bullish for the next week because of all the reasons, but it has to be a cautious mild bullish. If you liked and if you find this market view and study and analysis, and if it helped you to somehow form your own weekly market view for the next week, or your trade plan in some way, then consider getting a like button and share it to your friends. We have very few subscriptions and we appreciate your help in this regard. Please share, please subscribe if you're not done that, and share it to maximum. Thanks a lot. Happy trading. Happy learning. Bye.